Okay, in this video, we are going to have a look at the main functions of a central bank. This is topic 3.5, describe the role of a central bank and specifically the Swiss National Bank. But honestly, the Swiss National Bank works like any other bank, any other central bank, so the functions are going to be essentially the same. Well, basically, first, what is a central bank? A central bank is an organization that is usually independent from the government. Could be funded by the government, perhaps, but it's not. The point is that it's in most cases it's not really under the authority of the government, and this is something that is deliberate because we want a separation between fiscal policy and monetary policy. The government is in charge of fiscal policy, and the central bank is in charge of monetary policy. And that's why those two institutions tend to be independent. Otherwise, imagine if the government could control the central bank, well, in fact, it would control both fiscal and monetary policy. And that's also one reason for which the central bank is usually not allowed to purchase bonds directly from the government to maintain a separation. It's not always the case. For example, if you think about the Central Bank of China, the People's Bank of China, well, it is clearly under the authority of the central government. There is not much independence. But on paper, the European Central Bank, which is the central bank in the EU, is independent from national governments. On paper, the Federal Reserve, which is the central bank in the United States, is independent from the federal government. The Bank of England, the Bank of Japan, and the Swiss National Bank are not under the authority of the Confederation of the government. So it's an organization, usually independent, in the sense that it can make its own decisions, that has multiple important functions for an economy. And in fact, we can't really do better than that when defining a central bank, because, well, when we define it, we basically have to go through the different things it has to do. That's how that's the definition of the central bank. But okay, you could say that primarily the primary function of a central bank is to conduct monetary policy. That really is function number one, the conduct of monetary policy. And we've talked about monetary policy before. So that basically we want to prevent inflation. We want to maintain price stability. In Switzerland, the Swiss National Bank has a target of less than 2% inflation. So maintaining price stability, but also to manage the economy overall. So for example, when there is a great recession, we may want to stimulate aggregate demand by implementing an expansionary monetary policy. So that's really the first thing that the central bank can do. Of course, it's going to use the different instruments, the open market operations. It's going to use the discount rate. In Switzerland, it is called the policy rate. Okay, the policy rate, but it's the same as the discount rate, taux directeur in French. It can also use the minimum reserve ratio. Okay, I'll repeat it, but right now in Switzerland, a policy rate, which is the rate at which commercial bank can borrow from the central bank, is at 1.75%. So that's what commercial banks must pay to the central bank whenever they borrow. And the minimum, the reserve ratio is 2.5%, which is relatively low. I'll give you more information about that when we go through the next topic, which is going to be to describe the current monetary policy in Switzerland. Okay, so these are the key instruments that the central bank can use when we talk about monetary policy. Again, the objective is to influence the money supply and in turn the rates of interest all around the economy. Mission number two, banking supervision and regulation. That is another very important function of any central bank, is basically to supervise financial markets in the economy and make sure everything is okay, that everything works fine. And also the central bank is in charge of setting some regulations. Basically, what are the rules of the game? What can you do and what can't you do if you are an economic agent operating in the financial market, if you're a commercial bank? Can you trade stocks? Yes, no. Can you trade government bond? Yes or no? The minimum reserve ratio is a financial regulation. Will there be some, like anything, any regulation that preserves the safety of the financial system is designed and implemented and enforced by the central bank. So that's another very important that is also very important regular function of a central bank. Could be, for example, that the central bank can forbid commercial banks from offering interest rates on sight deposits. Why? Because if commercial banks start to offer interest payments on sight deposits, on demand deposits, it can start a competition between commercial banks where each of them is going to try to offer more and more interest on demand deposits to attract deposits, which is something that can reduce their profit margins and that can increase the instability of the financial markets. So, for example, in the US, the Federal Reserve has made it illegal for commercial banks to offer interest, so to pay interest on demand deposits, because it is believed to ensure greater stability of the financial system. Number 3, foreign exchange management. Like we said, the central bank especially can buy or foreign currencies, or you can even buy its own currency. But basically, it has a stock of foreign exchange reserves, which means a stock of foreign currencies which it can trade. This is something that can affect the exchange rate. And the central bank, and we'll see that in the case of the Swiss National Bank, the central bank can also take actions aimed at managing the exchange rate. Make sure that the exchange rate does not become too high, that our currency does not become too strong, and that the currency does not become too weak. We know that this is going to have important consequences on an economy. We don't call that monetary policy, we can call that the exchange rate policy. And the central bank, by engaging in those trades of foreign exchange reserves, can have a big influence on the exchange rate. Number 4, economic research and analysis. It's an organization that has access to a wide range of data that and there are a lot of experts who work for central banks. They can make some research, some economic analysis, and so to make some forecasts about what inflation will be, about what the exchange rate might be. And so they can make recommendations. The central bank can make forecasts and recommendations, especially for the government. Even though the central bank is independent from the government, it can use the output of this research to make recommendations to the government based on the economic research and analysis that they have produced. For example, we'll see that the Swiss National Bank makes forecasts on what the future rate of inflation is going to be, and this is an important part of its monetary policy, because by publishing this forecast, this influences the decision of economic agents today. A lender of last resort, which is in fact related to monetary policy, but I wanted to separate it. The central bank can lend money to commercial banks. Okay, there is a market that we sometimes call the discount window, which is a market where commercial banks, when they do not have enough liquidity, when they don't have enough money, they can borrow this money from the central bank. Careful, only commercial banks. You as an individual or even a business, they can't borrow from the central bank. Why of last resort? Because that's usually not how banks, commercial banks, borrow money. Why? Because it's usually more expensive to borrow from the central bank than to borrow from, say, other banks. Now, in most cases, when banks are missing money, when, for example, they don't have enough reserves, when the amount of reserves that they have is less than what is required, this is typically when banks need to borrow money. Well, in that case, they borrow from other banks. And the rate at which they can borrow from other commercial banks tends to be lower than the rate at which they borrow from the central bank. So that's why we say that just the central bank is a lender of last resort, because that's not the primary way in which commercial banks will finance a lack of reserve. Number 6, the central bank can also act as the bank of the government. So careful, it does not mean again that the central bank works for the government. The only thing that it means is that the central bank can provide financial services like managing the government budget, like the government receives money from taxes, has to do some expenses, has to make some international transactions. The central bank can assist in managing the budget and the financial transactions involving the government. So they provide financial service, and usually the central bank is paid for providing those services, which indicates that, yeah, well, the central bank is an independent organization that produces or supplies financial services to the government, like managing its budget, and so the central bank will receive some money. And in many countries, but not always, the central bank is also responsible for printing the currency, the banknotes, and minting the coins. That's the case in Switzerland. The Swiss National Bank is responsible for printing the Swiss francs. Okay, so these are the 7 primary functions of a central bank in general. In a later video, I will talk more specifically about what the Central Bank of Switzerland is doing, and especially what is the current monetary policy in Switzerland. That's all for now.